whereas a vegetarian, you can go either way. We get given critical moments at different points in our life where the decision you make in that moment can alter your path dramatically or keep it the same.
This is Property Investory, where we talk to successful property investors to find out more about their stories, mindset, and strategies. I'm Torrance Shum, and in this episode, we're speaking with Managing Director of Velocity Property Group, Brendon Ansell. He will share his globe-trotting story from his childhood in South Africa to playing cricket for the UK. He reveals why he moved to Australia and details how he used his background in finance to build a large property development company. In his professional life, Ansell spends his time focusing on the Velocity Property Group, which is a company that prides itself on creating luxurious spaces.
We don't do investment type properties, and we don't do lower price point properties. Most of our stuff's $1 million and up. So yeah, I've always loved aesthetically pleasing properties and luxurious properties, and now we create them.
As well as working hard towards his business goals, Ansell is also kept busy by building a charity.
I tend to invest my own personal money in social style ventures and businesses. So we own half of a natural earth building company in Nepal, where a gentleman who's an architect and a builder has a pay it forward philosophy, which was after the earthquakes, a large portion of the country was damaged. So the business model is he goes into villages, uses the villagers and their labour to help him build the first house, and then leaves them the blueprint on how to do it themselves, using natural earth materials, no construction, no concrete, no steel. Yeah, well, he's teaching us how to do that. So I don't know yet how we integrate that into the business. Obviously, Australia has a fascination, and obviously constructional stability is concrete and steel. But the irony of it in Nepal is that natural earth houses built out of natural earth materials can withstand earthquakes, whereas concrete and steel can't.
Ansell is leading a very busy life, and for him, every day is different.
No day is even remotely the same as the next. It's I tend to be quite fluid now. Obviously, we have staff who are very specifically skilled in all their distinct roles, so I no longer have to be the everything to everybody. So now, yeah, it's I'm trying to consciously create my day in a specific order, and I divide my activities into three main lines of work. One is activities that create future opportunities and income. The second is activities that create income today or don't lose money today. So obviously problem solving. And then the third is anything admin related or getting back to people. So I prioritise my day in that order.
Ansell does not have set working hours, but it does not mean he doesn't work hard. For him, the average 8-hour workday is considered to be short.
Oh, if you want to be successful, that's what you got to do. When everyone else is sleeping or hungover, it's what you do when everyone else is not at work, and what you do in your spare time that makes you successful.
Originally from South Africa, Ansell experienced a different childhood than expected.
I grew up in Durban in South Africa, so obviously during a fairly volatile period. I was at school during the changeover to democracy, which was an exciting time and a great time for the country, but also very volatile. Lots of violence, lots of sudden changes. So we went from a very strict militaristic style society to a completely open and free overnight. So as a 16, 17-year-old, you can imagine the type of trouble you'd get up to once you suddenly got free rein in life. So yeah, I had some challenging few years with pretty much very little structure, you could say.
At the age of 18, Ansell and his family wanted to move to Canada. However, that did not work out, So they made the big move to the land down under.
Australia is a very similar culture to South Africa in a lot of respects. Very similar weather, very similar sporting type culture. So I'm thankful we got to come here because it's far easier to assimilate quicker and build contacts and friends and stuff like that. So you don't have different language barriers and other challenges. So specifically, what triggered us to come, dire financial circumstances and some very close calls from a violence point of view.
Once he arrived in Australia, Ansell did not stay for long.
I played representative cricket in South Africa. So I had to make a choice whether to stay and have a go for the professional teams. But obviously the risk was high if you didn't make it. So I came to Australia specifically to make sure I could get the passport and visa stamp first before making any decisions. And then I actually ended up only staying for about 18 months, 2 years, and I took off to the UK to on a cricketing contract over there. And then for the next 5 years, pretty much split my time between the UK and New Zealand. Throughout his time playing cricket, Ansell did not need a typical 9-to-5 job. I didn't have to work too much. I got paid to play, but that can't be a good thing. I had a great time from pretty much 19 years old to 25. I pretty much got paid to travel the world. Didn't get a lot of money. It wasn't as professional back then in the late 90s as it is now. So we had a lot of parties and enjoyed ourselves as well. After his cricket career was coming to an end, Ansell spent 2 years living and working in London. Obviously, coming from a sporting background, they can open up different doors. So a very senior manager high up in HSBC and investment banking gave me a job in London for 2 years after I finished cricket. So that was a great segue out of cricket into a more professional environment. So I found in that time in London, people didn't work very hard. So it was a great opportunity for me to learn, the game of investment banking as quickly as I could. And so I immersed myself in it and got my knowledge and skill set up in banking and investment models. And I seemed to hit a wave then too in my mid-20s where I immersed myself in personal development as well. So I pretty much spent every waking moment learning everything I could from personal development to investing to property, and quickly found that property was sort of my original passion and what I came back to. Having worked in investment banking, the stock market made no sense to me and seemed to lack any form of real intrinsic value. So and obviously seeing people and clients lose the shirt off their back pretty quickly was interesting to see. So property was always my passion. So I reverted back to that, and I started buying property in Brisbane while I was working in London. I used that income to buy property back here, and thankfully that was around about 2000, 2001 and 2002. So I bought properties generally in that Logan area quite cheaply, and then the market went absolutely berserk in 03, 04, and I thought I was a property genius. Meanwhile, all I did was buy some cheap properties, and they went up in value. There was no skill set in it.
At this point in time, Ansell was settled into his life in London. However, a historic event urged him to move back to Australia.
I came back in 2002, shortly after September 11th. I was on the trading floor in London when we actually saw on TV the planes going into the buildings, and half the stockbrokers on our floor, their phones cut out. They were actually on the phone to some of the trading floors in the tower, so that was a bit of a shock. And the US Embassy was next door to us, so I didn't really want to hang around too long. So I think I quit the next month and spent 3 or 4 months travelling around Europe before coming back in 2002.
Once back in Australia, Ansell realised he would no longer be able to work in banking.
I tried to get back into banking here. I was a bit surprised that my experience in London didn't seem to count for anything. But obviously, I wanted to come back to Brisbane as opposed to Sydney. Brisbane's a very similar climate and lifestyle to Durban, where I'm from, so I've always preferred Brisbane over Sydney. So yeah, and coming back to Brisbane, there was essentially no banking here at that time, and obviously the early 2000s was a challenging time as well. There's very little work available or on the go, and then coming into 2003-04, the property market came off as well. So it was a challenging time to be in Brisbane and get ahead. So I decided to branch out and get into finance, as in mortgage broking and financing for other developers. So I literally spent the next probably till 2007, 8, probably till about. Well, I still have a share in the original finance business, which is being managed by someone else now. But up until about 5 years ago, I pretty much spent 8-9 years immersing myself in that and running my own business. And that was excellent because it was a great way to earn cash flow plus do your own small projects on the side and also learn lessons from our clients. So I didn't have to go through those hard times myself.
From here, Ansell decided to launch his property business, and we'll explore why he chose property over other investments.
I've always loved property. We did struggle financially in South Africa. We weren't, you could say we're lower middle class. So life was generally financially very much a struggle for us. But my mother was a part-time interior decorator, and so I used to go with her to appointments. And I used to see how the other side lived in, very wealthy mansions. So I've always been fascinated by property and aesthetically beautiful property.
Ansell's parents never directly influenced him to go into property.
They're in their 70s now, and they still work quite hard in the sort of auto electrical type businesses. So no, they've never been investors. None of my family is from that. On that side. So I'm completely 100% self-made. Your mindset and your personal development dictates where you are in life. I personally don't believe it's that random. I believe there are some random aspects to life, but we have a great element of control over it. And you're exactly where you are based on your personal development and your internal belief system. So I didn't want that life. I wanted a better life. So I learned what needed to be learned. You have to become the person first. History will show that people that suddenly win money, like in the lotto or something, generally, in most cases, lose it and end up in a worse position than before because their skill set and their mindset haven't kept pace with their wealth. So, if somebody wants to get out of that position, and obviously I've always been a forward-thinking and forward-moving person. I can't stand sitting still. I can't stand just going to the same mundane 9-to-5 job every day and say, this is my lot in life. I wasn't built that way. So I wasn't going to accept that. I was going to do whatever it took to get out of those situations.
Ansell was determined to establish a career in property development. He explains how he made this a reality.
I was always, even when I was doing the finance, I was still doing quality projects. I just never had that ability to try and, purchase a block of land and build the cheap house. I always wanted to try and spec it up or go for a higher price point. So, even going back to 2009, 2010, I was doing splitters in Hawthorne, Bulimba, those sorts of areas at $1 million plus then. So it wasn't. So we started that fairly early. But also my research told me that suburbs in Brisbane like Bulimba, Auckland, the inner city boutique low-density suburbs maintain their values exceptionally well. They're desirable lifestyle areas, so I didn't see it as great risk to go into that price point. I saw it as less risky than some of the cheaper suburbs that were more susceptible to interest rate rises and other factors and supply. Obviously, constrained land supply in the inner cities of Australia. So
once he bought a few properties, he did not hold on to them.
I just kept trading up. And interesting, I've had a very similar discussion this week with another chap I'm mentoring at the moment who is probably, you could almost identically put him in my spot back then in around 2002, 2003. And I've had this discussion this week already with someone else where he's actively trying to become full-time in property, but also hold on to properties along the way. And unless you have a consistent cash flow, it's very, very difficult to do that. And you hit the wall where you can just, no banks will lend you any money. So, I sold and kept trading up.
Across his property development career, Ansell has faced challenges. However, he believes in not looking backwards and that challenges will continue to show.
I would call myself a very strong, resilient person. So I tend not to be down too long. I don't allow myself to stay in that frame of mind for too long. So I have challenges every day. I have them now. Your challenges never go away. They just change. So, if anyone's expecting that they'll become successful and life will be suddenly easy and you have no issues in life, I'm sorry, that's not realistic. Some of my biggest challenges are now, not necessarily back in the past, because we have a far greater responsibility now. I do it for the love of the game, not for the love of the game first and personal wealth second. So when I was just on my own as a developer running my own company and making money or losing money, that was fine because there was always the next deal to go into. So a creative process that gave me my energy. Now I've got a far greater responsibility of looking after thousands of shareholders' hard-earned capital. So it's a different type of challenge. But if I go back to deals, thankfully I've only ever lost on one deal, and that was about $8,000. So my grounding in finance gave me the knowledge first before I went full-time into property. So I increased my knowledge base first before committing too heavily.
Despite Ansell not losing many deals, when he does, he always learns a valuable lesson.
I personally believe the ones you let go are more important than your wins. So even stock market traders will tell you that. You minimise your losses and you ride your wins. So when you have a property or a site and you can see that the market's coming off, rather than put your head in the sand and go, well, I'm just going to go and build this anyway and hope I can sell it at the end. I bought this site, I got a DA for 7 apartments. I was sitting there looking at it and going, well, I can't build it. I'm not going to be able to sell these. The market's coming off. I've got my timing all wrong here. So, you got two choices. You push ahead and hope that it comes out all right. Or I went, there's an offer on the table. It's a small loss, and $8,000 is a small loss in the project. If you're going to take a loss, I'll take the sale and move on. But the key there for me was I kind of went outside of my usual formula. Instead of sticking to premium high-end areas, high-end property for owner-occupiers, I went out to the outer suburbs and tried to expand the number of properties I was doing, going from 2 or 3 at a time to 6 and 7, because I wanted to get to that next stage. I wanted to increase the size of my project, but went out to an outlying area where, the market's more volatile. I could have lost $1 million and, gone bankrupt or gone backwards or eroded years of hard work. But it's very, very difficult for people to admit they made a mistake. It's very hard to actually put your hand up and go, I made a mess of this. I made a bad choice here. I've just got to suck up the loss and move on. And it doesn't matter if that's $8,000 or $100,000. If you can suppress your ego long enough to make calm, rational decisions for the long term, medium and long-term thinking is exceptionally important in property. Because if you're constantly focusing on the medium and long-term, what you're trying to build, you don't mind taking the $8,000 loss.
As well as learning from his losses, Ansell also learns from his successes.
I've always really understood momentum. Momentum is, and that probably comes from a sporting background, playing cricket and going through long periods of time. You really get, and go and sit and watch a test match, and you'll see momentum change. And if you're watching a test match and a momentum is, let's say, all with England at one point, and then Australia gets a wicket, it's a shift in momentum. And you can see the energy pick up of the bowlers and the players, because they've noticed that they understand they've broken a pattern. So they've got momentum back on their side, so they go harder. The bowler doesn't relax and go, I got a wicket, I'll look good on the scoreboard, I'm just going to chill out for the next few overs and bowl medium pace. They go harder. So they understand momentum. So when you get an opportunity or you meet a person or something that's really good value for you, don't go on holiday for a week. Go harder. You can go holiday later.
Ansell has had numerous success stories, though in the short time we had together, he could share his top 3.
During the GFC, everybody had severe problems. I had a lot of property, interest rates went through the roof. I was really getting squeezed. Cash flow was dropping, expenses were going through the roof. And I had a situation where I had a small project in Blimber, and I got right to the stage of about to start construction. And I just went, I can't do it. Everything's going bad in business and property. I can't build these. I've got to pull back. So obviously going to that builder who's very, very disappointed, I asked them, I think I had about $15,000 in cash left. I asked them what expenses that they had incurred to date. So I had a choice then. I could just walk away, save my 15 grand, look after myself. And I thought, there's something in this. There's a pivotal moment here that is something relevant to me. And if I do this, I've got to be confident I'm going to be rewarded for this. I paid him $12,500 to make sure that they incurred no loss. And I went right down to my last $2,500, which is a tough thing to do. I just had a strong intuitive feeling that I needed to do that. That action took me to another level. You could shift your thinking from self-preservation to a more abundant, big picture thinking. So it was a pivotal moment. That builder has completely missed the lesson completely. They just took the money and ran. That's all right. So it's not my job to, they didn't understand how unique that choice was and how big it was, because people would have been stiffing them left, right, and centre. So that's all right. That was for me. Second is meeting one of my current mentors who's close to being a billionaire at the moment, who is also a migrant, a very relevant. I wanted to choose mentors that were relevant to my situation, and migrants are very, very successful in Australia for obvious reasons. So he's a migrant, and he was essentially broke at late 40s, 50 years old, and started again from scratch, and has pretty much built a $1 billion empire. So inside 20 years. So I listened to him talk at an event, and I knew there were probably 1,000 people there, and I thought, I think everyone's going to pepper him after this. I'd just be yet another number of people ringing him, asking him if they can catch up. So I think I need to think differently. So I actually rang his office and I said to his secretary, I'm making a $1,000 donation to his charity now. I would like to meet him for an hour, but there is no obligation. I'll make the donation anyway. And that single event made me stand out above all the people ringing him, just asking him for something. And he actually called me in for a meeting. And then it's proceeded to keep in touch, and I've spent a bit of time with them. I've played golf with them, and the time I've spent with them has completely raised my ceiling on what's possible. When I first met him, I was doing little 6-packs, 7-packs of units, and then through a little bit of interaction, I've gone, he has created $1 billion empire in 20 years. there's no skill set difference between him and I. There's only a mindset difference. So what I took from that is I raised my ceiling massively. And I'm not going to put a ceiling on. I want to see how far we can go with this. Can we become the biggest property company in Australia? We decide. So that was the second one, second most pivotal moment. The third was just a chance meeting, which was shortly after that period as well. So that was 2013. So it was only 4 years ago that I met my mentor. And then the third event was I wanted to think how I could expand much bigger and faster. And the only way is access to larger amounts of capital and bringing on powerful joint venture partners. So I very fortunately happened to meet a gentleman from Singapore who was out on holiday. He got introduced by a mutual friend and just happened to be at that pivotal moment in time where and I actually had a choice because I was walking down Oxford Street with my son, going for a beer, and she rang me and said, this gentleman's out from Singapore. We're actually down the street in Bulimba. Do you want to meet up? So you got a choice. You can go, no, I'm going to go have a beer with my mates, or I can go meet a business contact. So I asked somebody to look after my son, and I went and met him. So if I didn't go to that meeting, it would have been a radically different outcome. So I met him, and their group from Singapore came out to view a project with us. And about 2 months later, they'd committed to a $20 million project, which up until that point, my largest project was probably 7 or 8 million. So I went to another level straight away. And that has triggered a series of events of access to large amounts of capital through Singapore and then to become a listed company. So there's 3 very key pivotal moments there. But intuitively, I could recognise them, the importance of them at the time, and didn't, committed to doing it. I didn't go and play golf or do something else and get to that later. I placed them as high priority.
Coming up after the break, we'll explore the strategy that Ansell used to achieve success.
Before you even get to that, it helps you get to your journey faster by having as much clarity as you can on what you're trying to do.
We'll learn about the effects of having mentors.
You can have mentors of different kinds all the time. Your parents can be a mentor.
We'll hear about the personal habits that contribute to his success.
Obviously read a lot of books.
And that's next. I'm Tyrone Shum, and you're listening to Property Investory. Hey, let's be real. Deals that can yield 20 to 30% per annum do exist. Don't believe me? Well, here's a story about property development I invested in Victoria. This developer had the project fully funded beforehand, but he and his family suffered a loss, a circumstance that led him to be unable to proceed with the development. So I stepped in, and in 2 weeks we funded the shortfall, allowing for the development to continue. 5 months later, the development was refinanced and we received our funds back with interest. Yes, there are amazing opportunities in the property market like this one. So, do you want to get a better return with low risk on your money? Then register your interest by visiting propertyinvestory.com. We've heard about Ansell's property investing journey. Now, let's explore how he executed it.
It helps you get to your journey faster by having as much clarity as you can on what you're trying to do. So before we even get to build anything or select a site, we've applied very much an economic thought process to our company. So what I mean by that is we're studying economic trends and demographic trends consistently on a daily basis, and then formulate our strategy after that. Thankfully, that's then coincided with a more market style of project. So we're an aging population. We have a very wealthy set of a population in empty nesters and baby boomers who have been fortunate that through the majority of their working life they've not hit a recession. So the stats show that the baby boomers account for about 9 or 10% of the population, yet they hold 60% of the wealth in Australia. That's a massively just distorted statistic. So we take that statistical analysis and go, where's Australia going in the future? I have certain thought patterns based on my, and we have one of my other mentors and consultants is actually a bit of a futurist and trend analysis style person. They come from a managed fund background. So, we're doing a little bit of future prediction here. So we've modelled all our entire business around that set of demographics and thought patterns and also what's happening in the future. So we are experiencing a massive shift. We will experience a massive shift in the next 20 years of baby boomers moving out of large homes into apartments and townhomes. We're a little bit ahead of the curve. We're a little bit frustrated we're not selling as fast, and maybe my expectations are too high because we do sell out a lot of projects prior to completion. We have one on the Gold Coast we've sold out at the start of construction, which is very, very rare. Very unique, very high-end project in Burleigh Heads. So we're a bit early in the cycle. We're only 3 to 4 years into a 15 to 20-year cycle. So the numbers are not there for us, for our product. But we're holding firm on that line, trusting that they'll come. And bear in mind too, it takes a lot of courage to build a $2 million property because there's no other options for it. You can't keep it and rent it out. You can't sell it through an investment channel. You have one exit strategy, which is to sell it to an owner-occupier.
You may think that only having one exit strategy is a risk and might cause failure, but this is where Ansell's strategy kicks in. Yeah, so our strategy is instead of doing excessively large projects of 100 to 200 units, we're doing lots of smaller boutique projects between sort of 15 and 50 million in gross value, and numbers between sort of 15 and 40 apartments. So we're using a risk minimisation strategy of diversification, spreading it across lots of projects, not one massive, big, all-out project, which is the complete opposite of my mentor, to be honest. But he has a higher risk profile than I do. He's all or nothing. So I'm not prepared to take that risk on from our shareholders. So no, it's not a negative question. It's something we need to ask ourselves. What happens if one project goes pear-shaped? Well, we have plenty of others, and they spread around the state. So, and then we can make the decision when we start construction as well. Now, the other thing I try and do is have cheap land prices, expensive builds. You push your risk to the back end of a project. A $4 million purchase on land, $20 million build, not a $15 million purchase on land, $15 million build, because your risk is brought forward. So if we purchase a site for, say, $3 or $4 million and we borrow 50% from a bank, we can let it sit there for 5 years. It's not going to stress us. So we can pick and choose when we go. So we'll start selling, and if we just don't sell anything, we won't start construction. So, there's lots of little things you can learn and do to minimise that, but being aware of risk and asking these questions is intelligent. The build it and hope they come mentality is very risky. Yeah, and different areas go off at different times. So we're hard out construction on the Gold Coast at the moment, which is going fantastic. Brisbane's tougher, so we're a little bit more cautious on Brisbane. But even then, when we buy a site, we try and diversify the product on there as well. So we've got a site in Taringa in Brisbane, which is a real upmarket inner city suburb in the western suburbs, near the universities, near all the private schools. And then we've got a 4,500 square metre site on a hilltop in one of the best streets in that suburb.
So instead of doing 50 apartments, we're mixing up the product, houses, townhouses, and apartments, and having differing price points. So as a buyer inquiry comes in, you can move them between the different products or give them options.
From many perspectives of property development, Ansell is very involved. This includes the design.
I get heavily involved in the architectural side. That's very much a passion of mine. Designing someone's home and why they want to live there. So the product mix is a number of different factors. The topography of the land, what's surrounding the site. And the reality of the site was that it's on a hilltop but slopes down a little bit. And at the top of the hill, we've got $3-4 million houses on the ridge. At the bottom of the hill, we've got $600,000-$700,000 apartments. So we've followed the topography of the land and the style of the suburb to make sense, hoping that Brisbane City Council would support us and see the rationale. But unfortunately, we don't get any support from our local councils. They missed the point completely. So it took us 14 months to get that approval, and in court. But so I had the option there of just scrapping it and starting again, but we held sway. I said, no, this is the right strategy, and we went to court and we won. Well, the irony is we paid 5.7 for the site and had an offer of 8. Do you know how hard it is to say no to that offer when everybody is telling you to bail? But we sat there and went, no. This project, once I get it through, has a strong profit margin, and it's great for our branding, and the suburb needs it. So sometimes there's a fine line between being pig-headed and stubborn.
On his path to success, Ansell has been guided by mentors.
You can have mentors of different kinds all the time. You know, your parents can be a mentor in how they have ethics. You know, anyone can be a mentor. I don't like to put people up on a pedestal that they have everything covered in life. I don't think that's possible. We always have something to work on, whether it's our fitness, our relationship, parenting, work. There's always something to work on. So to put a human being too high up on a pedestal and say he's perfect, I want to emulate his life, I don't seek to do that. I still want to do my own thing. So I've only gone for a mentor only in a purely a professional sense. A very ethical man, but very different, lifestyles. And because I also look at him and go, he works too much. There's no life balance. So I don't want that. I do want an aspect of life balance, and I have a 7-year-old son, so it's important that I don't just perpetuate a story of having a massively successful father that you never saw, for him. So it's, a little bit of balance in there. Although balance doesn't gel well with fast success. Ironically, the power of focus is what does it. So balance for me is periods of intense focus to create results quickly, balancing with periods of a bit of relaxation and pulling back, as opposed to just taking your 7 days and dividing them between leisure and work. I don't do that. When there's key pivotal moments, you go hard at work, and your family might not see you for days. But then you balance that up with, we take a big holiday every year. Must go overseas. I'll make it big. We go to Europe for 5-6 weeks. We enjoy ourselves. We're going to have to get this year for a lengthy period. So it's a different kind of balance. So going back to the mentor, I don't see his lifestyle as something I want to emulate. It's all about work. So it's only the work aspect and the mindset aspect. I'll pull out of that. Then I have other friends who have different skill sets, of a more spiritual nature, or a technical. I have friends who are forensic negotiators and stuff like that. So I'm fascinated by that different sides of it. So you have different kinds of mentors for different aspects of your life.
From his mentors, Ansell has one main takeaway.
Be very, very careful who you spend your time with. As an old saying, if you want to see your future, have a look at your immediate peer group. If you're still hanging around with your mates from uni who are not going anywhere, that's your future. If you want to increase your future and a better future, you need to get around better people, because you just absorb their energy and their thought patterns, and then when you're starting out and you have dreams and you're trying to build, there's plenty of chicken littles out there who will, knock your dreams. And Australia still has an issue with the tall poppy syndrome. I think the societal syndrome that is very limiting for us as a country to help us move forward to the next stage. We need to be celebrating success more.
As for himself, he has two main takeaways that he hopes to pass on to others.
Place more emphasis on the medium to long term and less emphasis on the short term. Give yourself a break in the short term about how quickly you can receive results. Take a 10-year approach, because when you do, you get massive results in the last 2 to 3 years. It's about building momentum, so give yourself a break. So when I came back from London, I sat down and wrote out my goal list. I'm arriving back, I'm going to do this, and I want to have 10 properties in the next 5 to 6 years. And then nothing happened for the first 3 or 4 years. Mass frustration until some people give you some perspective. They're like, hang on, mate, you've only been going for 3 years and you're trying to create a portfolio of 10 to 15 properties. That's a big ask. I go, yeah. So you can be ambitious, but just layer it with, property is a longer term game. It's not like the shares we can get in and out in 5 minutes. That's not a limiting belief system. What it does is it helps you in the early days get through the tough times. You don't give up so easily because you've got a longer term approach. And then secondly to that, be very clear on what you want to achieve. What is your primary reason for getting into property? Do you love your job and it's a side investment to build wealth for your family? Great, do that. Don't confuse it with wanting to get into property full-time, because very few people do it successfully. If property is your primary passion and you want to get into it, then go do it. But understand that the first few years will be hard as you build and grow. But I think a lot of people pile into the property game full-time for the love of money first and the game second. It's way harder, because when you're not getting the financial results, it's harder to get out of bed in the morning and motivate yourself. Because you're primary, and there's nothing wrong with the primary motivation being money. I'm not making a comparison there. Just understand that your reasoning for doing things, and and just tempering it with short, medium, and long-term thinking.
When it comes to personal habits that have helped Ansell, he pushes the importance of reading.
Obviously read a lot of books, a lot of, when I was running the finance company, instead of listening to the radio and music, I would constantly listen to personal development style CDs, and that stuff just absorbs into you. And a lot of it can be Americanized, but you can pick and choose. But, you can listen to a whole CD set and you only need 2 ideas. 1 or 2 ideas that can help you get to the next level. So, it might be a educational course on sales or something like that. And, during listening to that, I pick up 1 idea, then I get to the next appointment and apply it and get better at what I was doing. So, like I said earlier, it's what you do in your spare time. You don't learn anything new putting the radio on, listening to music.
Although books may not specifically guide you through your property investment journey, they can still provide great value.
I think books and that are excellent for concepts, ideas, and mindset. I've never really found a decent property book for the specific reason that they're too generic and it's very hard. There's lots of different property markets all over the world, countries, and then individually within a city. So to write a property book specifically, and I actually find them quite dull. So my style has been to use education in books for personal development, and then learn on the street, which has been the most value for me. And when we hire staff, we have people come in with the most fancy resumes and tremendous university degrees. In property, you've got to be street smart. You can't learn that stuff from a book. You got to be on the street, because negotiation, how do you, live negotiation on a property is very intuitive sometimes. So it's not a cerebral exercise.
Going into the future, Ansell is excited about the development of his company.
I'm in that phase where I need to reset. I need to reset higher goals, because we've achieved something fairly significant in a short space of time. So I need to raise that ceiling and reset. So I'm still in that process. Do we want to become one of the best small boutique property companies in Australia, or do we want to be the biggest? The challenge I see with the biggest guys in the country is they have a big machine to feed, so they have to keep doing deals. And they have to spread. They have to go do deals that don't match their original ethos just to make money, to feed a machine. So if I had to make a statement, it would be become the greatest property company in Australia, not the biggest or the most profitable. Something that our shareholders are massively proud to be a part of. And we make great returns for them, but they also see what we're doing. We're doing a lot of other stuff as well. I'm actively trying to get all our projects and construction and our developments off grid, to be a leader in that space, and to find wealthy buyers who connect with that vision as well and will help us pay for it. So, some of our projects we're spending $800,000-$900,000 per unit on the build, but we're actually spending $850 because of all the energy saving devices and everything we put in. It's very hard to get someone to share that cost with you, because they have a set budget and they go, that's all I want to pay for a property. So we're new in that cycle. I think everybody has the intention of wanting to help the environment and make do their part. They just don't want to pay for it. My own house is off grid. I have a Tesla Powerwall. I have solar. It's a big thing for me is being authentic, like actively not saying one thing and doing another. Authenticity is very important to me. That can be challenging as well. I'm a fairly direct person, and I can get people offside as well by not holding my tongue, because I'm not happy about the state and the quality of the activities and the levels of behaviour in our game. I think they're excessively poor. Our industry needs a clean out, and it's going to come. It'll come in the next 5 years. There's going to be a clean out. There's going to be some very challenging times in the market.
If given the opportunity, Ansell would give his past self valuable advice that we can all learn from.
I would probably say do it earlier. Like, even though our journey's been quick, I had the skill set to start and do it earlier. I didn't catch up with the belief system. And all the other things we've spoken about today. Be careful who you spend your time with, which I did that. I've had a weeding out process over the last 10 years. And secondly, don't worry so much about how you're perceived. I think a large part of our behaviour on a daily basis is to appease other people or concerned about how we're seen, in business and life. Just be yourself and go for it.
Thank you to Brendon Ansell, our guest on this episode of Property Investory. If you love the show, perhaps you're now ready to invest your money in a low-risk, high-return deal. If you are, then SMS me your name and email address on 04 99 88 10 40 to become a lender. There are amazing opportunities in the property market right now, and I'm looking for lenders who want to invest their money for as short as 6 months. What are you waiting for? Don't let your money just sit in the bank. To register your interest, text me your name and email address on 04 99 88 10 40.